Hello everyone, a very good morning, good afternoon, and good evening to all of my viewers from across the world living in different time zones. This is your host Vaibhav. In today's session of JForex Indicators Explained, I will be explaining to you one indicator which is based on the combination of the volume as well as the moving price. So we get the name which is volume weighted average price. This is the indicator which gives you a good idea of the trading activity and the direction of the trading activity, whether the buying is happening or the selling is happening. You can make a good judgment of the sentiments prevalent in the underlying market and what is the strength of those sentiments depending on the underlying activity. So you can make a informed decision whether the price momentum is likely to be sustained or not, and accordingly you can take the trade or simply sit on the sideline. So we will see how we can design and develop a system using this indicator, or if you simply want to be able to customize this indicator as per your need, as per your requirements. I will be explaining to you various features which are available on the JForex platform to make that happen, make that possible. So you will find these indicators listed among the overlap studies. So all you have to do is go to this overlap studies, and here you will find it just below the T named the indicator starting from T. Then we have V. So we have here alphabetical order of this indicator, and you will find these two indicators, volume WAP and volume WAP 2. I think there is not much of a difference. There is slight difference actually here if we consider, and the difference mainly concerns the editing tools. So I will try to explain what is the difference also. So first we will consider the basic concept, and after that we will also see some of the uses. Other option to add it, simply you type in the name volume. All right, so here we have this, and this is for the default setup. I think in this combination we can only define the typical price, average price, and we can't do much. So this is volume web 2. Let us try out the other combination. Okay, so here we can do more of an editing. So we have these options provided to us where we can choose the applied price as well as the calculation period under consideration. But if we use this combination, then we can't really determine the calculation period. All we can do is take the average price, and if there is any other indicator, then we can take that as the input option also. So first I will give you a brief idea of what the logic is. This indicator is mainly used by intraday traders who want to get a good idea of the price momentum after the market starts. In initial hours of the market opening, we have a lot of activities. If you are a trader who has traded in equity markets, you might have a very good idea that most of the time, not always, but most of the time, we have substantial activity in the first half an hour or first hour of the market opening. Afterwards, the momentum subsides, and we have sideways momentum most of the time in the equity segment. And if there is any news, then only we see substantial activity. Otherwise, the day just is like non the day passes and not much happens. So in that kind of scenario, you can rely on this combination of the volume weighted average price, and it will help you in figuring out what is the prevalent mood of the market participants. Now, the basic concept is very simple. We take the typical price of the underlying instrument, and then we take the volume of the given period, we multiply it, and then we keep doing this, and we add it to the prior period's multiplication of the volume and the average price. So we get this cumulative volume weighted average price, and then we divide it by total volume for that given period. So the formula is very simple. I'm not really able to go into the details of the formula. For that, you will have to do a bit of search and you will get the exact formula. Here, this session is mainly for looking at the possible uses and the customization options provided on this platform, which has been developed by the Dukascopy Bank SA. So for us, we have these tools given to us. We can define the kind of applied price which we want for this combination of the volume weighted average price to be used. So we have these prices: the close price, open price, high price, low price, median price, typical price. Generally we rely on the typical price, which is simply the value arrived at after adding the high, low, and the closing price, and then dividing it by the 3 for that given period of time. So that's the price. Else, if you want to shift it to the close price, you will see slight changes being observed in this plotting of the volume weighted average price. This is now based on the low price, the median price, and typical price. All right. Then we have this calculation period, the number of periods which are taken into consideration while the value for that average duration is arrived. So if you want to take into consideration only the recent pricing and the volume data, then you can keep it short and it will be a lot more responsive. So you get an average price and you get a direction whether it is bearish or bullish, and this is a very remarkable indicator. It is going to follow the price moves very closely, and in times where we have substantial move in one direction, pardon me, when we have unidirectional movement, when we have significant move on lower side or on the upper side, we can be in position to profit substantially. But if the underlying instrument doesn't really go, in that case we will have these zigzag kind of moves where only for some time it will rise, then again it will reverse the course, then again it will start to rise. So that will make life very difficult. But otherwise, if we have this kind of sentiments prevalent, then we will be in position to make good amount of money. So what we have to do is we have to take all sorts of possibilities into consideration while arriving at a to try out. So for that, we will have to determine what kind of calculation period is likely to give us a good idea of the underlying instrument's trend, if it is on the lower time or it is on the higher time. We have these plotting of the average price, the volume weighted average price for now last 14 candle periods. So we get this range, we see what is happening in the market, and accordingly we can take the trade. So here we have this combination for us, and if the trend is strong, then in those circumstances, as I have said earlier also, we have this upward side momentum, and it has followed the price moves very closely. So you can use this as the possible support range. You can use the average price as the price to get entry after due consolidation, and if it continues to move slightly or move considerably also below this average price, then you can consider it as a possible trend change. But as long as it is respecting the average price and trying to reverse the course after correcting to that level, then I think it can be considered as a support range in the bullish environment, and it can be considered as a resistance zone in the bearish environment. Other aspect of it is that you are if you are not really confident that the trend is going to sustain, and if you are expecting the price moves to remain in a narrow range, so in those kind of circumstances it is better to buy below the average price and sell above the average price. So you can be confident that the reversal or regression is likely to take place, and the price is more likely to revert back towards the average price, and some sort of deviation on the opposite side. In those kind of circumstances, you will do well to buy below the average price and sell above the average price. But of course, in that situation also, you have to go for the deviation which you expect and then do consolidation, and only after that you can make an informed decision. So these are the combination provided to you. Now we can make a volume weighted average price of another average. So if I say, for example, if I add another volume weighted average price of say lower time frame, and then I can take the volume weighted average of this other indicator. So here you get this option also. Now if we want to use the existing indicator's output value as the input value for this indicator, instead of taking this closing value of that underlying instruments closing price. So if I shift it to the existing indicator, then we will have a lot more smoothing in terms of this plotting of the volume weighted average price. But at the same time, it is going to be less responsive. And here you can observe that it is going to be more smoother, but of course less responsive compared to what we had when we were simply using this closing price of the given candle as the applied price for calculation of these volume weighted average price. Okay, so these are the possible combinations you can use with these input options. Now, if you want to increase it to say for higher calculation period, you can do that as well. Now, in this larger time frame plotting, you will have a lot more smoothing in this indicator, but it is going to be, of course, a lot less responsive, and a lot of time has to pass even after the reversal takes place. The price has to sustain on the opposite side of the spectrum. Only after that it will change its prior course. If it was rising and if the tendency of the volume weighted average price was bullish, then it will have to change the course and hold below this average price for a significant amount of time. Only after that we will see change unfolding in these plotting of the volume weighted average price indicator. So that's how this system works. Now I will restore it back at least to some extent. I will reduce this to say 24. So we are now considering last 1 day's data while looking at this momentum of the volume weighted average price. Then we have these output options given to us, and we can take trend up or trend down, and we can go for two different color combinations. So we get these styling options provided to us by the platform, and we can also opt for these different transparency setting. So now if you see that it is looking a lot more colorful, a lot more attractive compared to a simple line which we were seeing on the charts earlier. So this new version, new iteration is more attractive, more aesthetic. Then we come to the advanced editing options. If you want the recalculation to be done on new candle only, then you opt for this box. Here you take this check mark, and you will see that this plotted value will remain constant for this given candlestick grid. If it is hourly, then the value will remain constant for all of the hour. But if you keep it unchecked, that box is unchecked, then it will keep varying as per the current closing price. If you want the highlighted time zone for the calculation period, then you can go to the recent output value, whichever output value you are considering, and you will immediately get the idea of what is the calculation period which has been used to arrive at that particular value. All right, so we get this. Then we have these options of calculation from the custom data. So we can opt for any instrument. We can take the instrument from the chart, or we can define it at Euro USD. So we can do both of these things. Then we have the period for calculating the indicator if we use it from the chart. So whenever we change the charts candle period, then we will have the indicator being recalculated for the given period. But if we keep it fixed to say, for example, 10 minutes, then whatever is the indicators, sorry, not indicators, whatever is the chart's current candle period, it will be calculated only from the 10 minutes candle period, and the value will be shown accordingly. All right. So I am now again opting back for use from the chart. Similar thing applies for the spread side. Whether you are going for the ask or bid, you can directly specify it here, or you can simply use it from the chart. If we want the indicator to be shown on all period, then we have to choose this. Otherwise, if you want the indicator to be shown only on certain time frame and not other, then you have to specify those time frames on which the indicator should be shown here, and other time frames beside these chosen indicator time frames, no plotting will be done for the given indicator. So that's how this system works. And that's all from my side for explanation of this indicator, a very useful tool for technical analysis, for figuring out the sentiments and the reliability of the price moves. More the volume in the underlying price move, more sustainable that price move is likely to be, as it indicates increased trader activity. So that's why most of the big institutional players as well as many retail traders use this volume weighted average price compared to a simple moving average. So for further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there too for trying out these combinations and other interesting tools provided on the platform. You have to check out the JForex 4 platform. The link for that has also been included in the bio. Thank you all for joining in. I will be back tomorrow with a new indicator and a new explanation. Till then, have a fabulous time, make a lot of money. See you tomorrow, guys. Have a good time.